If you break both legs of a duck, most likely the duck won't die from it, and there's even a fairly high chance that after some time it will be able to walk again. But it will already be a lame duck. Right now, I'm talking about the situation in the Strait of Hormuz. There, the global economy for a while broke both its legs, and when agreements were reached between the US and Iran, the duck seemed to start walking again, and oil reflected that. WTI hit a new low since March 11th of this year and posted the lowest daily candle close since March 10th. This is definitely a positive sign. But then the negative came as well. Israel began bombing Lebanon. Iran didn't like this, and further negotiations between the US and Iran were halted. So our duck is still noticeably limping. I'm mentioning this ahead of today's review or analysis of Bitcoin, because the situation in the global economy is not as good as it might seem, and this duck could fall at any moment. The consequences of even the situation that has already occurred, with disruptions in the supply of fuel, fertilizers, and natural gas, will almost inevitably affect the efficiency of the global economy and its outcomes. And at this point, it's no longer a question of probability. It's purely a matter of time before it happens. So, how is all of this connected to Bitcoin? Well, surely even the blind can see and the deaf can hear that the stock market is hitting new all-time highs every week, while Bitcoin and other cryptocurrencies are far from their historical highs and sometimes even set new yearly lows. This indicates that the market is in no hurry to invest money in risky financial instruments. Yesterday, I recorded a video on TikTok where I said that I absolutely do not recommend buying Bitcoin, because there is a high probability it will go significantly lower as soon as the S&P 500 index experiences a correction. This is almost certain to happen based on my technical analysis of the S&P 500. By the way, this review will be released today, right after the one on Bitcoin. But right now we're still talking about Bitcoin. Does this mean that Bitcoin can't go up here and now? Of course it can. But at the moment there is nothing on the chart that would indicate this. Bitcoin is stuck in the range of $62,000 to $64,000 after pulling back from the 67,000 area. Right now it's trading roughly in the 63,400 to 63,500 range. This is the area of Friday's close on the Chicago Mercantile Exchange. It turns out that after an attempt at recovery, the market was unable to consolidate its gains, and once again Bitcoin moved sideways, this time under selling pressure. The main problem for Bitcoin, as well as for financial markets in general, is not a local one right now. It's a macroeconomic issue. And above all, it is connected to the Federal Reserve's policy. Because whereas previously the Federal Reserve was expected to lower rates, now the market is increasingly leaning toward the view that rates will simply be raised in the foreseeable future. And this means more expensive money, more expensive loans, and a greater demand for the dollar. And when the market needs dollars, it sells whatever can be exchanged for dollars, cryptocurrencies, stocks, and other risky assets. Higher rates put pressure on both the stock market and the cryptocurrency market. For now, it's only potential pressure, but it's still pressure. It's also worth paying attention to Bitcoin ETF flows. They remain weak. This is a key downside for the bullish scenario because on June 16th there was a small net inflow into Bitcoin ETFs of $10 million, but already on June 17th there was an outflow of $82.5 million. On June 18th, about $91 million more left Bitcoin ETFs. That is, over the last 3 available trading sessions, about $163 million in total have flowed out of Bitcoin ETFs. This is by no means a catastrophe, but it is definitely not the kind of foundation on which a strong, sustainable upward trend is usually built. Trump's agreements with Iran gave the market some relief and even pushed the stock market up. But note that the risky cryptocurrency market practically did not react to this at all. And again, I want to repeat that this does not mean that Bitcoin cannot grow. One of the comments on my TikTok yesterday made a pretty reasonable point. Until the fall elections in the US, the stock market might simply not be allowed to fall. They'll either keep it flat or push it upward. That means theoretically Bitcoin has a window of opportunity until that time. Well, if we stick to this version, in theory we could see Bitcoin at $70,000, $80,000, or even around $110,000. Such a scenario cannot be completely ruled out. But I want to emphasize that right now, from a technical analysis standpoint, there are no reasons to buy. At the moment, the situation looks more like an attempt at stabilization rather than a confident bullish impulse. If Bitcoin fails to hold above 64 to 64,500 and ETF flows remain negative, then the current rebound will look more like a pause before an even deeper plunge to the bottom, rather than the start of an upward trend. But if the S&P 500 continues to rise, ETF outflows turn into ETF inflows, and the dollar starts to weaken, then Bitcoin will have a chance to reach new multi-week or perhaps even multi-month highs. Now let's move on to technical analysis and see what it tells us. Here we have the daily candles of Bitcoin, and as you can see, it's once again stuck in the same range where it was trading roughly from February 5th, 2026 up until probably April 7th of this year. Notice that we have a key support level. Essentially, this is Bitcoin's last line of defense on the daily candles. That is $62,909. A few days ago, I outlined two possible scenarios for how things could unfold when Bitcoin was trading around $64,500 on June 17th. One of the scenarios was a rise directly from the current levels to around $70,500 to the upper boundary of the range, or a continued decline to the area of $62,909 to the lower boundary of the range. I said that the yellow scenario, here it is, the yellow curve, is the higher priority and more likely one. Also note the fact that Bitcoin has not broken through the 62,909 level and so far has only touched it with the wicks of the candles. This is encouraging. If we absorb this falling candle from June 18th, and for that Bitcoin needs to close, let's see where. Above the level of $64,509, then in this case we already have the right to talk about growth, at least to the area of $66,272, and potentially even to around $70,580. But here we need to pay attention to this yellow circle. And here I have highlighted the intersection of the 50-day and 100-day moving averages. And this specific movement is what we call a bearish crossover, occurring when the short-term or faster 50-day moving average line crosses directly below the slower one from top to bottom. This technical signal indicates that right here and now, the shorter trend points to a clear downward priority or selling pressure, which essentially means that due to this crossover event, we have a somewhat higher statistical probability of updating this local low point below the $59,130 price level. This suggests the market may continue its descent in the near term. Again, the key indication for this movement will be Bitcoin consolidating on the daily candles below the level of $62,909, while consolidation above the level of $64,509 on the contrary will point to growth. Everything is perfectly clear. There are specific levels you can rely on. For now, this is a sideways trend by all formal indicators. Now I'll remove all the markings and switch first to the monthly candles. Yes, there's still a little less than 2 weeks left until the end of the month. But pay attention, right now Bitcoin is trading lower than it has since October 2024. In other words, we are currently looking at the potential for the lowest monthly candle close in about a year and a half. Maybe I'm wrong. Don't nitpick. You can see everything on the chart. And this means that from here, the movement could continue, first toward the close of the August 2024 candle, which is $59,000, and Bitcoin has already dropped to that level, and then an even lower window of opportunity opens up toward the base of the February 2024 candle, which is already $42,500. So, if June closes at roughly the current levels, don't expect anything good. This doesn't bode well at all. Now let's look at the weekly candles. On the weekly candles, the situation is also, to put it mildly, not great. Take note, a bearish crossover between the 50-week and 100-week moving averages is forming, but it's too early to talk about it for now. It's just a preliminary sign. But at the same time, Bitcoin has halted its decline once again at the last line of defense, the 200-week moving average, with the risk of engulfing the previous week's gains. And if we suddenly see that Bitcoin closes below the 200-week moving average, first of all, it will automatically mean that last week's gains have been wiped out, and secondly, it will signify a break of a key support level. And then a window of opportunity opens up here in the area of the September 2024 weekly candle close at $55,000, and roughly in this same area lies the 300-week moving average. In other words, the situation is quite unfavorable. And on the weekly candles, we can only talk about any kind of reversal after this large bearish candle has been fully retraced. And for that, Bitcoin needs to close above $74,000. So the weekly candles leave even fewer chances for Bitcoin to grow, because even a rise to the area of $73,000 or $74,000 would still not constitute a reversal. This could be the maximum allowable correction before a deeper decline, because the week before last, notice, closed lower than anything since October 2024. That's also bad. So the weekly candles are pointing downward, and although the monthly candles haven't closed yet, they also indirectly indicate a downward trend. And as for the daily charts, they show that we're currently in a sideways trend and at a decision point. Again, the market situation is changing, but right now, let's say it leans more toward a decline than toward growth. We will keep an eye on how the situation develops. I've pointed out the key levels for you beyond which growth or decline begins. I also want to emphasize once again that I trade on the QuantFury platform. I recommend you do the same if you're into trading or investing, because here you don't pay any commissions at all. Spot quotes, thousands of financial instruments from cryptocurrencies, forex markets, stocks, indices, commodities, and much more. Subscribe to the channel. All the best to you. Goodbye.